Welcome. My name is John Mazzara, Remax Results. Today I'm back with Danny Fluke over at Kind Lending, and he is going to share another program. I mean, they just keep coming. They keep getting better all the time. This one is an asset-based program. It's like an asset dissipation, but rather than me putting names on it like that, I'm going to let Danny talk to you all about it and show you how you can qualify just based on your assets. So Danny, take it away.
Absolutely. Thanks, John. So the asset utilization program is for people that have a large asset base, right? It could be a retirement fund, it might be a 401k, or it might be their state government pension fund, like for a firefighter or a cop or someone like that, a teacher, right? It could be the result of an inheritance, right? That they get a large asset block. It might be from a divorce settlement where there's a splitting of assets and someone finds themselves with a substantial amount of assets, right? And when I say substantial, what I mean is that it has to be above a certain amount before it really makes a difference when we run it through the algorithm. So let me do a little bit of a deeper dive. Now, this is not as sexy and as exciting as a lot of our programs are, but it's really important because this is not just a standalone program, right? So what I mean by that is someone may make, let's say they make 100,000 a year or they make 80,000 a year, but they have this asset block of $500,000 or $600,000 or $700,000, right? They can use both of those. They can use their W-2 and they can use that asset utilization, right? So there's two distinct differences, advantages that you have using our asset utilization as opposed to someone else, right? So the first one is that we just ask for the asset to be verified. We don't make you pledge the asset. So if I call my person at Schwab and I say, hey, Joanne, I need a $600,000 loan, they're going to take $600,000 and they're going to set it aside out of my investment. And then they're going to put a lien on the house, right? If something catastrophic happens, I'm in real trouble, right? Because not only is now the asset at risk, but now the house, but now my assets are at risk also, right? So I have it on both ends, right? Because I pledged those assets against that house. We're not asking you to do that. All we ask is that you verify it, right? And with 2 account statements that shows here's what the assets are worth, right? So how do we determine that? Well, it's the algorithm that we use. It depends on your age, how close you are to retirement, and the type of account, right? So if you have it in checking and savings, you get 100% of it, right? If it's in a IRA and you're 52 years old, you're not going to get the same credit for that account as you would if you were 60 years old. You're closer to retirement, right? So an example I like to use is I had friends of mine that they were both cops in Manhattan, right? They both retired in their 50s. And between the two of them, they had just under $2 million in their retirement accounts. And they wanted to get out of New York. They wanted to move to Florida. They wanted to buy a golf course condo, right? So they called me and they said, what can we do? No income. They hadn't started collecting their pensions yet. So we got them qualified by using that asset base and then running the algorithm on it. We gave them almost $20,000 a month in income from that asset base, right? So the reason why I bring this up is because there's a lot of clients that can use this. There's a lot of home buyers out there that can use this. I have an Atlanta Brave that went from making no money to having a $3 million sign-on bonus. We used the sign-on bonus as his asset and got him pre-qualified for his loan, right? You have entertainers that didn't have any income, and then all of a sudden they go viral, they get the big record deal, and now they get this big bonus, right? Well, they don't want to wait a year to get a house. They want the house now, right? So all we need is 2-month statements, and we can go ahead and put this deal together for them, right? Again, the majority of the clients you're going to help with this, you're going to piggyback it with their W-2, right? You're going to piggyback it. The last one of these that I personally closed, because I'm the national sales manager, but I have my own pipeline, right? So the last one of these that I personally closed was someone that went to work. They were in a Fortune 500 company. They had a couple $1 million in stocks and bonds, and their investment portfolio was rock solid. They got out of the corporate rat race, went to work for a nonprofit for 60 grand a year, and they ended up buying a $1.2 million house, right? So that's the beauty of this, is that we can use it in conjunction with the bank statement program, with the P&L program, with a full doc W-2 paycheck stub program, right? We can combine these different programs to give the borrower, give that home buyer the most buying power possible.
Wow. Well, that is huge that you can stack them and add them together. And I'm thinking from a divorce standpoint with regards to a spouse that didn't work for many years and is going to come into, a nice lump sum, selling half the house or half they're getting a quadro, from their person's retirement account.
Right.
And, they don't have a job, or they're going to go into something, at a very low income, and then they want to live in a nice house again, and they can't because they don't qualify, but they can make the payment either because their alimony is going to come out, or maybe it's not going to be for 3 years, it's going to be for 2 years. So you can't do it under traditional or with the child support, but they've got the assets. So I can see where in a divorce situation, how this could really, really be helpful for somebody wanting to get what they want.
Yeah.
Besides
Absolutely.
all of the great examples you gave, but the fact that they can come together too, that you can be additive. So I don't have to just go bank statement. I go bank statement plus I can go asset, and together I can qualify for much more because I can add them together. That's huge.
And even if, what I don't want to do is say, instead of buying the $200,000 house, now you qualify for the 650. If you don't want to spend 650, you don't have to, but it's nice to know that you have that option, that you have the flexibility, right? You're not going to be capped at a house that you don't want, or an area that you don't want, right? You have these options, so that the home buyers in more control over where they can go. And obviously, like I said, I sound like a broken record, but I don't recommend everybody maxes out. If we can get you approved for 950, don't go buy a 950 house. You can if you want, but you know your budget, what you can afford. So common sense comes into this too.
Oh yeah, you're letting people be adults and working with the advantage of their asset, which they would have to liquidate if they needed to make the payment, or they're going to protect their credit, and they've been acting responsibly for the majority probably of their life, and they know themselves better than maybe the underwriting guidelines, and you're making that possible. And then they're not stuck in the box, and then they're not, they're able to move on with their lives or begin their lives. So yeah, that's tremendous. Another great program.
Yeah, you'll find that it's like you said, it's more on that retiree inheritance divorce is where the majority of these clients come from. But again, like I said, I have that Atlanta Brave that we just closed for an escrow, right? So there are situations that pop up where people suddenly have a lot of assets, and we can help them get qualified based on those assets. And the big thing is, it's just verified.
Yep.
Just verified.
Yeah, I thought about your example with a margin loan. So let's say you had, portfolio, you can get 50% or 70% or whatever. And then all of a sudden, the black swan event hits and you're screwed. And now you got to sell your asset to get margin, to cover margin.
Right.
Whereas in this case, you don't have to sell it because it's not a margin loan. You didn't pledge your securities as collateral.
Exactly.
That's a monster too. I mean, that's huge.
Right.
Great. Again, this 20% down. Most programs are, all of your programs are 20% down or more, correct?
Well, the
or
bank,
no. The bank
Yeah,
statement was 90%.
bank statement program, we can do as low as 10% down. Yeah, but the asset utilization, it is 20% down. And you can use this for cash out also for a refinance. So if
Okay.
somebody wanted to access a couple $100,000 equity and they didn't want to cause a taxable event from their investment accounts, we can use that asset to approve that cash out transaction also. Because maybe somebody wants to add another investment property, or they want to upgrade their current property, right? We have that option also.
Yeah, they're not 59.5 and don't want to do a 72T distribution or don't want to do anything like that. Yeah, this is another great option. Wow.
Yeah,
A lot of financial planners should know about these things so that they can, or accountants, so that they can help protect against the penalties of the premature withdrawals to help people get what they need. So
absolutely. I couldn't agree more. In fact, I talk with a lot of financial investors, or financial advisors, I should say, and we always talk about AUM, assets under management, right?
sure.
How to protect that. And here's an interesting point for any of the financial advisors out there that might be watching us, right? Is that when I had a property in Georgia, right? I live in Texas full time, but I had a property in Georgia, and I was going back and forth between Georgia and Texas. Well, when my wife and I bought that property, I had to get approved by the in-house lender of that realtor, right? So I said, look, I'm in the business. There's no way you're going to get my loan. So if you want to jump through these hoops, I got a 760 something FICO. I don't know what it was, but I said, listen, I can do this, but you're not going to get my loan. The guy's like, I know, I just got to do it. I go, okay, fine. So they gave me the approval, right? And it was Northwest Bank. I'm going to rat them out here, right? Because Northwest Bank, the broker, also sent my deal over to B of A, and he sent it to Chase, and I think one other bank. I don't remember what it was, but all those banks, Northwest Bank, Chase, I think it was B of A, all of them immediately, their financial advisors that work for those banks were calling me because all my Schwab information was there.
Sure.
So if you're a financial planner, a financial advisor, and you're allowing your clients to go out there and just apply for mortgages, and they're going to a bank, guess what's going to happen? You are sending your clients over to the competition. That's why you want to use Kind Lending, right? We're an independent direct lender. We're not a broker. We're an independent direct lender. We are not going to try to cannibalize your clients. So I've just thrown that out there because when you brought that up about the financial planning and the financial investments, it just triggered that memory for me. So that's why you want to partner with Kind Lending.
That is 100% true. They'll offer a quarter off or whatever for moving X dollars of assets over and working with their advisors. And it's another fragmentation of that relationship. And you need Switzerland. You need somebody that isn't going to try to steal everything away, and protect and kind of control that. And you have access to everything. So it's not like, you have more access than or let you be the second opinion. If they're going to try to go somewhere, then just say, hey, you know what? You got to let Annie get a shot at it and see who's better. You can choose. Nobody's going to make you do anything, but at least at a minimum, if not first opinion, let you always have a second shot at it, second opinion, and see if you can improve.
Absolutely.
Yeah, wonderful. Well, another great program. I really appreciate your time today and sharing it. Everybody, that's the guy over there. You need to call him. All right. Thanks, Danny. I appreciate it.
Hey, thanks, Sean. As always.
You betcha.
Bye-bye.